Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks for having me. Sorry I had to miss last time.
Well, medical emergencies happen to everybody, and let's face it, we're not getting any younger. Anyway.
Well, on the medical emergency, it was a false alarm with my eye, so everything is good.
Yes, so he can see the computer screen here quite clearly. And the way I described the market was wobbly, and you said it's a good description of what's going on in the stock markets right now.
Well, yes, we're starting to see a little wobbliness, a real technical term there, huh? But we are starting to see a little wobbliness, wobbly, I can't even say it. Say it for me.
Wobbliness.
Yeah, there you go. Yeah. We're seeing some of that. I have said, I guess to kind of work the ends to that and talk about that for a minute, but, I have said that the longer this goes on, the worse it would be, and I've also said that, I thought all asset classes would peak together in close proximity. And I stick to that. I think that's, very true. No change there. And it even more profound statements than before, actually. I think that this COVID thing was used as both an excuse to let some air out of the bubble, as well as an excuse to blow the bubble even tighter, if you will. And what I mean by that is, obviously, the markets declined in 2020 and looked like a scare, and it was a scare, but it let some air out of the bubble. But then, it was also simultaneously used to re-expand the bubble even further. And when I say re-expand the bubble even further, used, it was an excuse, an avenue, a tool, however you want to view it, to further expand the federal debt in the name of stimulus and reinflate and blow the bubble even tighter. And the shortages that were created from the COVID issues, with supplies. I mean, you can't even get. In the South, we use, a lot of people use pine straw to go in their flower beds. Well, you can't even get pine straw. I went somewhere for electrical supply part yesterday. You can't get the simplest of things. I mean, some you can. In the grocery store, lunch meat, deli meat in the deli counter. The counter was skimpy. I'm like, well, what's up with deli meat? You can't get deli meat anymore? And they said, no, we're having a hard time getting deli meat. And so it's just, it's created some shortages that have driven price that certainly has been inflationary, but it has also helped refuel this bubble that we've seen in pretty much all asset classes. And with that said, yes, I'm seeing some wobbliness starting to occur, because I think that reblowing of the bubble is I'm seeing signs that it's starting to wane a little bit.
Well, there are meat shortages because of the drought that's hit Western Canada and the U.S. And, lumber prices are going to start going up again because of the massive forest fires in California and in British Columbia. They're just burning supply, or the sawmills can't work because of the smoke.
Yep. And I wanted to talk about that as well, because, we talked about, the lumber prices, and, when I say that things are starting to wane, I think on the one hand, the way I'm looking at it is, I think that's one of the reasons that this infrastructure bill is so important at this juncture and being pushed, is that right as this market starts to show the wobbliness, and they've all told us the truth on this, that they thought the inflationary fears were transitory. I do agree with that. I've said that all along, and I stick to that. And one example of that is that, you talked about lumber prices, and sure, they may bounce back because there may be some shortages here, but in the big picture, because of some of the sectors I want to talk about, lumber, remember, I think, back in May, we joked about it because a friend of mine who told me that he saw something, an article or something, and I remember us talking about it, called it peak lumber, and we laughed about it because of, remember the peak oil thing back in 2007 and 2008, and there was something about peak lumber, and we laughed about that. But lumber prices, they peaked at $1,711 back in May, and now they're, as of 7/15, they were down to $490. So that's like a 71+% decline. So, they have bounced some since then, but the point is that the air come way out of that bubble, and I'm not disputing what you're saying about there being some issues because of the forest fires, but I think overall that particular sector has peaked. And another one we talked about was Bitcoin as of July the 20th. That's bounced some then, off of those lows. But as of July 20th, just for perspective, it was down like 54% from the high. So, I think we've seen, a major turn there. And in looking at some of the other sectors where I see evidence that a turn has taken hold or is trying to take hold, the energy sector. Particularly looking at some of the majors, the energy sector looks like it has rolled and or is rolling, depending on specifically where you look. But I think overall, the energy sector looks like it's rolling over. And, basic materials and airlines and home furnishings and housing. And because of the peak that I think is the rolling in housing, I think that is what we're seeing with lumber prices. And then, you keep digging and looking at sectors, the gaming and leisure sector and hotels and, China. Look at China. China set up, I think it was, I'm not looking at the chart, but I'm saying this from memory, I think back in like March, and then it just kind of flatlined, and then finally the setup broke. And China is, it's starting to accelerate some there. Some of the grains are starting to roll. So, yes, I say all that to say this, within the expectation of everything bouncing together and all asset classes trying to roll together, we are seeing some cracks in some of these sectors. The question is, can they save it again? Can they blow this bubble even tighter and somehow save it again? And I think part of that, I go back to the infrastructure thing, I think part of that is that bill to keep that debt, expand the debt. So I think that's really what's behind the infrastructure thing, is to try to keep this thing going. And, can they? It's not in my mind a positive thing, because it makes there's no way out of this. There's no way to look at this as not negative at this point, because they made a bad situation worse by blowing a big bubble even bigger. And I don't know how, I don't know. I mean, it's a matter of when it sets up and pops. And like I said, we're seeing some evidence that is a warning in some of these sectors. The question is, do we see the setup in the mainstream indexes and averages, like the industrials and so forth, the S&P, because the structure there is what's key. And if this bleeds over into those structures with the setup and it starts to crack, then we know that something's happening, and that's what we're watching closely is that structure. That is it in a nutshell. That is key. But we have seen that happen in some of those sectors we talked about.
Market historian Bob Hoyt keeps thinking that this fall we're going to see a major correction. So many others too are just saying the market, as you said, is wobbly. The volume is low. It's only being held up by 3 or 4 major companies. If you take out the Facebooks, the Microsofts, the Amazons, the market's already going down.
Yeah, I mean, the internals are, you're exactly right. The internals, they do stink. You look at some of the breadth data and so forth, it's horrible. And, behind the scenes, something that no one's talking about, I'm trying to pull up the numbers as we speak. Let me get them for you. I'll even get the number for today. It may be posted. I'm not sure. But, we talked about the reverse repos. It's been a while. As of yesterday, we were at $15.7 trillion for the month. And I think that from my perspective, like I said, that's a terribly complex. I don't claim to know everything about the inner workings of the Fed. I don't know if anyone does, but there are some experts out there that have, a pretty good grasp on it. But from my simple perspective on that was all in part, at the end of the day, as they say, I hate that term, but at the end of the day, as they say, it was to put a floor under these short-term rates, and they've been successful at that. So they pulled another rabbit out of the hat with that, and they've managed to be able to hold it. And how long can this go on? This is a tremendous, tremendous, tremendous bubble, and they haven't fixed anything. That's the thing. And beneath the surface, we see these sectors trying to set up in these cracks. We see these reverse repo operations. We see all this stuff going on. We sit on top of this enormous bubble with the economy in the state that it's in, and now we're facing, what looks like you're pushing for another, it looks to me like pushing for another shutdown around the planet with the, this COVID thing. And here we sit at all-time highs, and everybody thinks everything's okay. And so it's extremely dangerous, and I think just like every other major top, every other bubble in history, it's going to set up, bada bing, bada boom, and people are going to go, what the hell happened? And that goes back to the structure and watching the structure and understanding where we are, and if a setup, once it starts to try to bite, does it take hold, and can it bite?
We'll have more with Tim Cyclesman Wood right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, are we in a certain commodity cycle? And if we are, where are we in that cycle?
We are in everything. Yes, in my world, looking at things cyclically, in 2020, everything bottomed together, but with commodities in particular, there's a 3-year cycle that is key. That 3-year cycle bottomed in 2020, and I think that we're flirting with potentially a top here in that 3-year cycle. Again, it does it bite, and how well can they manage it and postpone this? But it looks like in the using your word, the wobbliness, I can't say it. Looking at the wobbliness, say it for me.
Wobbliness.
Wobbliness of the market and asset classes as a whole, it looks like that cycle may be trying to turn down. And I don't know if I mentioned it, but I'm seeing that even with some of the meats, some of the grains, even are trying, and oil, the oil sector, looking at some of the underlying, like I said, oil indexes and like some of the major players in, the stocks, specific stocks of some of the oil I can't talk today. Exploration companies and that sort of thing. I do see evidence of it trying to roll. So yes, I think commodities is trying to roll with everything else.
Yeah, it just reminds me of when I was doing news on the radio, and one day I couldn't say astronomers. I'm going astronomer, and finally I said guys who look at the stars. Exactly.
By the way, the repo number for today was 987 billion. And on top of the the total as of yesterday was 15.7 trillion. So that takes us to 16.6 trillion or so for the month. And we have another day. We'll top 17 trillion. And, last month we were at 14. And then the month before that, we were at 5.5. And the month before that, we were at 1.4. And so you see,
these numbers are so large, Tim. It's hard to imagine what that means. And is it bad? Is it good? Do we know?
It's going exponential, and it's telling us that something is wrong. And I think what's wrong, like I said, looking at it from the perspective that I have from what I think is key is that they were trying to keep short-term rates from going any lower. And when I say lower, short-term rates were right at the 2020 levels, and I mean sitting right on the line and about to go below those levels when these operations started to ramp up. And so I think that, at least in part, one of the major aspects of this is to put a floor under short-term rates. And they have been successful at that, and in turn, it's held everything. It's held the markets. So how long can the game go on?
Is the government trying to keep interest rates low, not to help businesses recover from, officially this was never a recession because the numbers went up, but as you say, there's the real economy that's being ignored. But is it because they want to keep interest rates low because governments couldn't afford the interest payments on their debt if the interest rates go any higher?
I don't think they can afford the debt, period, with or without interest at this point where we're at. But I think the point is that, I mean, obviously there may be, that may be an aspect of it, but I think it's to try to keep this whole Ponzi scheme at this point alive. By putting a floor under short-term rates and keep rates down. I think it's just to keep, just simply to keep the market alive, that bubble going. Why have, how do you say this? Put it off tomorrow. If you can put it off a day, then you don't have to deal with it today. Put off the inevitable collapse of this, the unwinding of this, as long as you possibly can, by any and all means necessary, because it's going to be a disaster when it happens. So I think that's the game. Keep it going.
What do you think happens to the U.S. dollar with this?
Contrary to popular thinking, I think that the deflationary forces that are at play here, I think is going to be very positive for the dollar, because that's what we're looking at here is deflation. That's what they're fighting. And people lose sight of that. I know we have seen inflation in the short run. I'm not blind. I go to the grocery store like everyone else. I buy, tires for my car and lunch meat at the deli counter, just like the rest of us. So I see the inflationary prices in the short run, but I think it is tremendously deflationary. And that's what they're trying to, that's the real enemy, is the deflation. And that's what they've been trying to fight. That's what they have been fighting for 20 years. I mean, let's not fool ourselves. This has been going on. This started at the .com bubble, when they really started interfering with the markets and trying to manage them, if you will, and fight the deflation that was trying to unwind then. Let's not forget, that's where job participation rate and the real economy, and that's all those sort of things really peaked, and it's been a fight against deflation all along. Think about it. Let me try to say it another way. Why do they spin it and tell you that they're cutting rates? Why? This is all about keeping it going because of the unwinding of the bubble. That is deflationary. That's what they're fighting. And so I think that obviously deflation is the big enemy that they're trying to, prevent. And so that's where we're at.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@housestreet.com, and we'll ask that question on your behalf. Find us on Twitter @HouseStreet, our YouTube channel, Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.